As you know, CPF is one of those things in life you can't avoid if you are Singaporean or PR. So we might as well ask, how can we make the most out of CPF? While you can leave your CPF funds in your account to get the standard interest that the government guarantees, but what if I tell you there are ways to potentially get higher returns on your CPF? You can do this by investing some of your CPF funds. So which CPF accounts can you use for investments? As you know, there are 4 different types of CPF accounts. The first one is the ordinary account or OA. You can use this for day-to-day things such as housing, insurance, and investment. The second one is SA or special account, which is meant for your later years and for investment, especially in retirement-related products. The third one is MediSave account, which is for hospitalization expenses and approved medical insurance. And the last one is retirement account, which is created when you turn 55 years old. If you want to invest your CPF funds, you can do so using your OA, but you will need to ensure that a minimum of $20,000 is retained in the account. For stocks, you can only invest up to 35% of your investable savings, and for gold, you can only invest up to 10% of your investable savings. Investable savings here refers to your account balance plus whatever you have withdrawn for housing and education. For example, if you have withdrawn $30,000 for housing and now you have $70,000 in your OA, then your investable savings are $70,000 plus $30,000, which is $100,000. That means you can invest up to $35,000 in shares and property funds and up to $10,000 or 10% in gold. If you want to invest from your special account, then you need to retain at least $40,000. To find out exactly how much of your OA or SA that can be used for investing, you can simply just log in to your CPF account either via CPF website or the My CPF mobile app and select My Statement. You should be able to see a stock section which shows how much you are allowed to invest. Another alternative would be for you to visit any of the CPF service center. So, how do you exactly start to invest using CPF money? The first step is to ensure that you meet criteria. Before investment, you need to meet all of these criteria set by the government. Step number 2 would be to take the CPF investment scheme self-awareness quiz. Step number 3 would be to open a CPF investment account, which is needed if you want to invest money from your CPF OA. You can do this by opening a CPF investment scheme or CPF IS account with a registered bank such as DBS, OCBC, or UOB. Once this is done, you can invest directly with the financial product providers. However, to invest money from your CPF SA, you do not need to open a CPF IS account. You can just approach the financial product providers directly. Step number 4 is to contact the financial product providers that you want. For example, if you want to put your CPF money in a fixed deposit, buy SGS bonds, or treasury bills, then contact the relevant bank. But if you want to invest in mutual funds, buy shares, etc., what you need to do is to open an investment brokerage account. There is a list of CPF IS eligible investment brokerage, but I also suggest for you to research first and compare their fees. Note that your brokerage doesn't necessarily have to be the same bank as your CPF investment account. For example, your CPF investment account can be with DBS, but you can invest in ETC with Philips Securities. Your broker will be the one coordinating with DBS to execute the purchase. If you want to DIY your CPF investment, you can do so through robo-advisor. Currently, there's only one robo-advisor left that offers CPF IS, which is endowus. So, what can you invest your CPF money in? Lucky for us, the government already nicely summarized what are the acceptable investment products for OA and SA. But perhaps, let me call out some of the popular choices. The first one is T-bills or treasury bills. T-bills are short-term government bills that mature in 1 year or less from their issue date. The government currently offers 6 months and 1 year T-bills. They are issued at a discount to their face value, and when the T-bills mature, the government pays the holder an amount of money equivalent to its face value. The next one is SGS bonds or Singapore Government Securities Bonds. As the name indicates, SGS bonds are debt securities issued by the Singapore government. The bonds are longer-term bonds that mature in 2, 5, 10, 15, 20, 30, or even 50 years. SGS bondholders will receive a fixed coupon every 6 months before the bond matures, and they will also receive the face value upon the bond maturity. Note that these SGS bonds have a longer duration, and you might lose your capital if you do not hold the bonds till maturity. This is because the bonds are subjected to price fluctuations due to interest rate changes and market movements. You can purchase these T-bills and SGS bonds through your CPFIS OA agent banks online platforms or CPFIS SA bond dealers, but keep an eye out for the application closing dates. The next type that is popular and low risk is fixed deposits. So fixed deposits lock in your money with a bank or financial institution for a predefined period. During this tenure, the institution offers a guaranteed interest rate, and at the end of the tenure, you will receive the initial amount plus the earned interest. Early withdrawal may incur fees or penalties, so it is advisable for you to ensure that you have enough funds for daily needs. Fixed deposits are guaranteed by banks or financial institutions. However, in the event that they fail, it's good to know that SDIC insures bank deposits up to $100,000. You might ask, can you buy any stocks using CPF funds? Well, not exactly. Unlike regular investments, there are a list of stocks that you can invest in on the SGX website using CPF funds. But you won't be able to find things like Microsoft, Tesla, Nvidia, etc. The government has its own criteria to determine what kind of stock you can buy, such as it has to be a company that is incorporated in Singapore, must trade in Singapore dollars, not be on the watch list, etc. So, what's the best way to invest your CPF funds? If you are new to investing and prefer things to be safe and steady, you can look at options such as Singapore government bonds or fixed deposits. They might not give super high returns, but they are less risky. If you can handle a bit more ups and downs, then you can explore investing in things such as mutual funds or shares. They have the potential for bigger returns, but also has the chance of losing some money. The key is to figure out what is your risk tolerance or how much risk you are comfortable with. There are plenty of resources online and from the CPF board itself to help you decide what's right for you. Remember, it's for your own retirement, so take your time and choose wisely. At the end of the day, it's really up to you and what you are comfortable with. But here's the part that you need to bear in mind. Interest from CPF is guaranteed, but interest from CPFIS is not. If you don't invest wisely or you are unlucky, you could end up with less than 2.5% in return. In fact, according to a statistic from 2019, only 60% of CPF investors managed to beat the guaranteed CPF rate over a 5-year period. That means 40% actually lost. Another thing to note that if you invest using CPF money, any returns that you get will go back to your CPF accounts. It won't go directly as cash to your pocket. That means you should invest with the future in mind. This is the money for your retirement, not for you to enjoy now. To ensure that you don't invest in volatile or high-risk options, CPF has shortlisted some investment products for you. After all, they don't want you to gamble your CPF money away. But here's the most interesting part. Even if, let's say, your investment failed, you don't have to pay back the amount you lost to CPF. I guess this is why the government is so strict on what type of investment you can do with CPF. Otherwise, it can be a loophole for people to encash their CPF under the pretense of investing in some shady businesses. Before starting investing, here are the things that you need to decide. First, you need to decide what is your investment goal. For example, is it to purchase a home, save for retirement, be financially independent, etc. Determining your investment goal clearly can help you to decide what investment strategy you should take. The second one is investment horizon. All investments need time to grow. It is not a get-rich-quick scheme. That's why it's important to determine your investment horizon, which is the time frame that you plan to use the invested money before you invest. If you are a young investor, goals such as retirement may mean having a longer investment horizon, but on the other hand, other goals such as saving for your home may be a near-term need and require a more conservative approach to grow your capital steadily. In general, if you adopt a longer investment time horizon, usually the higher risk that you may be able to take. The third one is your risk tolerance. Each individual has a different level of tolerance for risk. Depending on your age and income level, you might have differing level of risk appetite when determining investment options. Historically, safer investments offer lower investment returns. On the other hand, investments such as shares-related products can provide potentially higher returns, but the risk is high as well, like you could actually lose money. If you are still young, have no family commitments, and don't have any mortgage to pay yet, you might be okay with higher risk instruments such as shares-related products. On the other hand, if you are a middle-aged person with a family and a housing loan to pay, you might be more comfortable investing in less risky instruments such as a balanced fund, in which investors' funds are invested in a mixture of shares and bonds. At the end of the day, only you can decide what risk-return trade-off you are comfortable with. If you would like to start investing, get good deals, or make money on the side, check links in my description.